All right, all right, all right, all right. It is 11 o'clock. Let's get started. All right, everyone. So our guest has arrived. Now, let me tell you a little bit about him. Hold on one second, everyone. I gotta pull my notes back up. Give me 1 minute. Give me 1 minute. All right, because I like to do this properly. Give me a minute, everyone. I gotta. All right, here we are. Here we are. So, so, um, so let me go ahead and do this. We're thrilled to have a special guest joining us, someone whose expertise and accomplishments have made a significant impact in the world of commercial real estate investing. Joe Rinderknecht is the founder of Gray Partners Capital, a seasoned investor and entrepreneur with over a decade of experience in commercial property management, asset management, and underwriting. With a remarkable portfolio of approximately 600 apartment units spanning states like Utah, Montana, Idaho, Texas, and Ohio, Joe has mastered the art of multifamily real estate investing. Beyond his impressive track record in real estate, Joe is also champion of meaningful causes. He is the founder of Tiny Tribe 506 506 C nonprofit organization and supports families facing life-changing accidents, reflecting his deep commitment to making a positive impact both within and beyond the real estate sector. In today's session, what we're going to talk about is underwriting. All right. So let's take this time and let's welcome to our platform the Commercial Multifamily Underwriting Show, Mr. Joe Rinderknecht. Welcome, Joe. Welcome.
Thank you, Darryl. Happy to
All
be here
right.
and talk underwriting. And, it's pretty much how I got started in this world of real estate. So excited to be here and talk about underwriting.
So, so Joe, we're going to jump right into this because we have a few minutes left. So you said, wait a minute, you said that's how you got started, underwriting. Talk to us about that. Talk to us about how is that you got started in underwriting?
Yeah, so I got started in this game back in 2014, 2015. I was going to Utah State University in Logan, Utah, and I was a part of a entrepreneurship program that they had at the university there. And one of the resident mentors was a real estate guy, and I started doing a bunch of bird dogging for him. And really, our meetings, it was really cool because like when we were supposed to like be meeting and talking about like the small business I was trying to create, we would talk about and run numbers on deals. Most of the deals we were working on were smaller duplex to fourplex, more hard money flips type situations. But either way, like I got my bachelor's in finance, have a minor in entrepreneurship and real estate. So numbers have always been a part of, who I am and what I really love to dive into when it comes to, doing deals.
Right.
So I went from, starting there working for the mentor to um, I see back in 2018, I worked as a property manager and I worked on an 80 unit LIHTC property and I think there's an extension of underwriting that you still have to do even after, right, you buy the property, right?
Right.
Getting it stabilized and going through all building pro formas. It's all part of the underwriting process, right? Underwriting in my mind doesn't just start when you find a deal and stop when you buy it,
Right.
right? It goes through the full life cycle of the deal all the way to when you sell the deal. Um, and then I actually, to really get a lot of experience in the larger multifamily world, I went and worked for groups like Obsidian Capital. Some of you may know them, like David Tupin, um, you know, uh, Glenn Gonzalez, Mike Woodfield. I worked with them for quite a while. And then I worked for a couple other groups out of Vegas and Utah doing underwriting on acquisitions and new developments. And so um, I found that like underwriting is one of the most important pieces of the puzzle when doing a deal. And what I have found for myself and other people could probably relate to this is that I had a bad case of analysis paralysis,
Mm.
right? And so I had to really streamline how I underwrote deals to be able to make decisions quick, or else, I've lost deals because I've put too much time into underwriting before submitting an offer,
Right.
right? And I think a lot of the property owners that we target are mom and pop. The last three deals that we're buying or that under contract now are, you know, owners that have owned it for 10 to 20 years and they're 60 years older and their financials are pretty horrible for the most part, right? So
Mm-hmm.
so like I've gotten really good at underwriting just based on a rent roll, because sometimes that's all you can get.
That's right. So I'm just taking notes as you talk because there's certain things that you hit on, and I want to jump into them just a little more. One of the things that you said that I constantly preach on is the important piece is underwriting. When you say that, tell the listener why it's the important piece. Why that is so important that underwriting is that important.
In my mind, the numbers don't lie and it takes the emotion out of it. I'm a very emotional person and yeah, I've done deals. You get too emotionally attached and if you lose that deal, then your head's not on correctly, you're not thinking of it correctly. And if you lose that deal, I mean, it could wreck your entire world, right? That has happened to me. And so in my mind, the numbers are what tell the story. The numbers are what you've got to go off of, no matter how you feel
Mhm.
about it, no matter if you absolutely have to, you know, there's far too many people that do a deal just to get a deal done. Um, and I think that if you can keep to a standard of if it doesn't hit a certain return metric, um, it's on to the next, right? So in the short, I would say, Darryl, it just takes all emotion out of it, and the numbers don't lie. So
Gotcha, gotcha. You know, the one thing that um I've learned over the process is separation. You have to separate yourself from that property, and you got to look at it from the outside. Like you said, the numbers are not going to lie. They're going to tell you what's going on. Okay, the numbers are the numbers. That emotion is something that if if you are a very emotional person, I guess I guess you this is where meditation will come in because meditation teaches you how to separate yourself from the object and and to be able to look at that object from an outside perspective.
Right.
I like that what you said with the emotion. You also mentioned about analysis paralysis. You went through the analysis paralysis phase. And I think sometimes I think sometimes I'm still caught up in analysis paralysis. Now and now when I say that, let me explain because I want to explain. I've gotten to the point where and a lot of this is because too, I have a coaching program. So I try to be very detailed.
Right.
And as a coach, when you're coaching your student, you have to make sure that everything is is on point. You crossed your T's, you dotted your I's, and sometimes the window of opportunity it starts closing, right? So really, I guess I should not say analysis paralysis, but it's just that I need to make sure that the student understands the process, and at the same time, I'm still trying to stay within that window of opportunity before it actually shuts on me. How did you get over that analysis paralysis? What was it that said, "Yo, I have to do something here, or else I'm just going to start moving losing deals"?
Yeah, I think it was one deal actually that it was in Salt Lake City, Utah. I was working with one of my business partners who I mean, he's far more intricate when it comes to underwriting, and we got way into the weeds, and days led to weeks, and we kept asking the seller for more things and verifying things, and it came down that we went to submit our offer, and our offer was like 3 weeks, maybe a little bit more after
Mm,
our first conversation, after we had got everything.
yeah,
And he said, hey, I actually submitted an offer from a guys. They came in, looked at it, like what they saw, looked at financials quick, and gave me an offer next day. And he took that
mm,
offer. And to me, like, I still remember that, him telling us that and the exact property, and thinking, man, because we really missed out on an opportunity because
right,
we tried to calculate everything possible, you know, um, when in my mind, like, if you know your market, right?
right,
If you know your market and you can quickly underwrite, then you have a far better chance of getting a deal done. And I can speak to Darryl, like, what's really cool is I saw that deal that we missed, that I know we would have
mhm,
made a lot of money on, but we won a deal. But so that deal that we lost was probably 2 3 years ago.
yeah,
um, and it's really stuck with me and helped me be quicker, like, because I've learned from that. My partner and I won a 54 unit in Missoula, Montana, that we bought end of September, right? It was one
okay,
of those deals where I've got notifications on LoopNet. We got, like, I know the market pretty well because I do deals, Montana, Idaho, Utah, and I knew the market really well. And this deal came across my email at like 9 o'clock at night, and it was priced at like 124,000 a unit, 98 build. And I emailed the broker right away, said, hey, can you send me a rent roll, financials? And he sent it. And within 12 hours, we were the first ones to put an offer in at a little bit below asking, with 50K non-refundable earnest money, because we knew how much of an opportunity it was, and we quickly underwrote it. Right now, if
mhm,
we would not have done that and put in an offer first, we toured it first, we checked our comps. um there was a lot of competition on that deal. There
right.
were five offers over asking, and we actually ended up beating two other offers that were 200,000 higher than ours.
Okay.
Because we were so quick and we're pretty strong in our offer because we knew the market and we did a quick analysis, got our offer in. And I think once you get that offer in, that's when you've got to really dig in and make sure that the numbers that you put are correct, right?
Got you.
But you can lose deals if you try and do that, like the big analysis before you submit an offer. So, and I think
Yeah.
it's kind of deal by deal too, right? But
Right.
like
Right.
something that hot, we knew we had to just quickly underwrite it and get it out there because we ended up buying it for 126 a unit, and like the closest comps, which are like half a block away, similar
Yeah.
vintage, same unit size, sold 2 years ago for 200 a unit, right? And that deal's been crazy good already just in the 2 months that we've owned it.
Wow. Wow. That is fantastic. So then I want to stay on this story for a little bit
Yeah.
because the actions, the action that you took, would you say to a brand new investor that it's okay to take those same actions? Because because let's because the thing is a new investor may not know. And
Right.
they may be saying in their head, yo, if he did that, I could do that. But there are certain words that you kept tapping on. And everyone, I hope everyone that's listening to this, I hope you picked up on the word that he kept tapping on before you go out and try to do it. Okay. The words, I said words, but it was words. The words he kept tapping on. He knew his market. So he was able to move quickly. All right.
Yep.
If you and in my coaching program, that's one thing that I stress. Um, those in my coaching program, you cannot have no more than two markets. Simply that's it. But there's no way you're going to build a relationship with brokers and you're jumping all over the place. And I'm telling you from experience, when I first got into this business, that's what I was doing. I was not only in Utah, I was in Montana, I was in Washington State, I was in I was in the East Coast and Baltimore, I was down there in North Carolina, I was up north in South Dakota, and I have the proof in the pudding to show it to you. Okay. And my coach told me that too. He said, yo, as long as you keep jumping, you ain't gonna find no deal.
Yep.
It's gonna so everyone listen to what he said to new investors, especially new investors that's just getting started. He knew his market. He was able to make a decision very quickly. All right. Now we're going to go into this just a little more because, all right, by you knowing your market, what are some of the things that you were able to say, hey, I don't need to do because you knew your market? What were some of the things you said, hey, I don't need to do?
I think one of the biggest ones is like a property management budget.
Mm-hmm.
Because property management budgets, you got to go and you got to interview multiple. Like if you're new, so this was the first deal we had bought in this market, but we knew it because we've been trying to buy there.
Yeah.
It takes a long time to go interview multiple property managers and to get multiple budgets. The biggest thing for us was we got the rent roll. We said,
Mm-hmm.
holy cow, it's been so long since we've seen any rents at the $600, $700 level. So like, there's light bulb number one. It's like, okay, like especially on the Western Front here, like who has rent 600, $700? We quickly go to Facebook Marketplace or Zillow. What are rents going for that same size square footage? Like that takes 5 minutes. Oh, they're going for 1,200, or the studios that are 600 are going for 1,000, and the two beds that are, our average was 750, and the average rent to market was like 1,250. So it's like, okay, that's an easy, like
Yeah.
that's a $300-$400 bump to market. Okay, like I don't
Yeah,
need to go get a budget to have somebody tell me that I can get that. If there's multiple properties within a half mile that are telling me that's what they're,
yeah,
marketing,
yeah,
right? And so that was one of the biggest ones. Because yeah, property management budgets can take a long time and you can really fall down a
yeah.
rabbit hole trying to analyze expenses and um, I think for me when I'm looking at a value add deal, I don't so much look even at the T12 so much anymore. I like
Really?
to really dig into and I will, but I really dig into the rent roll personally
Mm,
because to me the rent roll tells a story that the T12 may not. Like yes, the T12 will tell you vacancy and loss to lease and concessions and expenses. But I think for me, if you can only, I've trained myself to be really good at the rent roll because sometimes that's all you get, and you have no idea if what the T12 is telling you is actually legitimate,
gotcha.
based on who you're buying from, right? So the rent
Mm,
roll can tell you, right, when leases are coming due. So how much can you push to market and how quickly. It can
mm-hmm.
show you. You can kind of like without um, like you can kind of see who the tenant demographic is, right? And you can look at the rents, you can look at the other income. And so I do actually a pretty deep like synopsis of, okay, for this unit mix, what's the low, what's the average, what's the high? And usually I can say, hey, if they're achieving the high, I can, say that's $100. Okay, I know I can at least get 100 because they're already getting that,
Right,
without going on Facebook Marketplace. And so what I like to do is, figure out what's the total income, and then you just do a quick calculation, right? And that's really what we did here. We said, okay, the gross income from the rents are this, okay, times that by 0.95, depending on your market and what your economic occupancy is. Add on your other income. On this one, it was like 1,500 a unit a year, and then just times that by a market expense ratio of 40% gets your NOI. Okay, what's your cap rate based on your purchase price? Okay, I feel good about this. We did kind of like a quick, okay, well, if we can take the average 780 and get it to 1250, okay, what's our year one? If we can get it up to that in year one, what's that cap rate? Okay, it's a 7. I mean, that's awesome anywhere right now, right? So, okay, let's
mm,
submit this offer at asking, and that's essentially what we did on this deal, right? We did that quick analysis on the rent roll and saw that there was a lot of opportunity because 45 of the 54 units would be month to month by the time we bought it,
gotcha.
right?
Wow. Yeah.
And to
That,
fast
uh,
forward really
uh,
quick, if you like, we sent out. So we've owned it for 2 months. We sent out a renewal of it turned out to be an average of $380 across the board. And we have yet to hear back from 13 tenants, but we've got 19 tenants who have renewed and 15 tenants that are vacating. So what's crazy is I mean, that's just to market, right? That's not
right.
even renovated rent. Like the renovated rent, it's like another $300 higher. What's really cool about that is like it really verifies and affirms what we felt when we submitted that offer within a couple hours of it going on the market, because we're just increasing our rents to those renewals, increase
Yeah.
the value by like 1.5 million on a six cap, you know.
Gotcha.
So
Gotcha. Now, and and man, Utah, you know, I was, I remember when I first when I first got started, I was looking in Utah. Um, someone told me, someone told me, get out. It said you better get out of Utah because they ain't gonna sell you nothing. It was just a. I was brand new. I was new, so I didn't know no better. And I wound up leaving. But Utah was definitely a market that I wanted to know more about. and I wanted to invest in that market. Matter of fact, it wasn't just Utah either. It was Utah, it was Montana. I wanted to invest in, and it was something about Montana that I loved. It like it just set out. It wasn't at that time. Now that was a while back, y'all. And I'm not new no more. So, but it wasn't it wasn't like Houston, like fat like fast. It's like the growth was there, and
Yeah.
you could ride the train. You could ride the train. Um, but let's get back to let's get back to what you were saying. You knew your market. Did you have to tour the property, or did you or your partner just say, "Yo, let's just do a drive-by or whatever"?
Yeah, so we submitted the offer first, right? Made sure we were in the running, because the broker that we reached out, who's a listing, had 12 inquiries within the first 10 hours of
Right.
it being listed. So we made sure we were first.
Okay.
And then I was actually headed to Montana for
Yeah.
vacation, and I took like a 6-hour detour with my wife and kids, and we stayed the night in Missoula. Got a really good feel for the market, the area, and we toured it within a couple days of submitting an offer.
Got you.
So, I think that, you know, touring is very important, and I've got a good story
Mhm.
with this too. I think even though it's not underwriting, it's the way to verify your underwriting,
Right.
right? Verify the area, verify, the square footages of the units to make sure you can get the price for rent per square foot, right? My partner and I, there's a deal in Rexburg, Idaho that we were putting an offer on. We submitted an offer on, and we waited a little long. We went and toured it yesterday, and we went back to our broker and we're like, hey, we actually need a price deduction, or we need to pull out because these units are like 200 square feet lower than what we were expecting, right? And
Really?
there's similar product next door to it that have more amenities, right? We thought the square footages were higher, and Rexburg, Idaho is a very different market. It's kind of its own little world, and
Mhm.
so you got to be um, very knowledgeable of the area, which we are. But it's been about 2 weeks since we submitted an offer, and we should have gone and looked at that property.
Right.
It's a couple days at least after we submitted the offer, because we have to go back and say, hey, we got to change a few things, and who knows if we'll be in the running. But right,
Right.
I think that, yeah, touring is extremely important, especially if you're serious about it. Like if you're new, and if you're new, my best advice is like all of the active deals I've ever done have been local to me that I can get to within a couple hours. The
Right.
deals in like Texas and Ohio that I've done, I've got the fund of funds, right? And so I have a different structure where I invest passively with other operators, but I only do active deals
Yeah.
in my own backyard. I would say for somebody new, get an offer in. It's part of the reps. Like it's like going to the gym. You got to get the reps in, even if you don't know there's a chance of you getting it. Like still put that
Right.
offer in. You know,
Right.
I won a deal. I bought a fourplex one. It was my very first fourplex off of the notion of I had a 1% chance of getting it. I was kind of like the guys on Dumb and Dumber where they're like, you got like 1% chance. And what does he say? He's like, so you're saying there's a chance, right? Like that's my
Yeah.
total motto. And I ended up getting this fourplex,
Wow.
made my partner and I 700,000 over the last 7 years, right? And it is an amazing deal because I took that 1% chance and I
Right.
went after it. So what I would say to people new, or anybody who thinks, oh, I don't know how to raise money, oh, I don't know how to do this, like just take action, put an offer in, go tour it, get the reps in, go and meet the broker. Go. I mean, that's how you learn, right? College is great.
Correct.
Being on masterminds is amazing. Having a mentor is great, but the real lessons and learnings are by doing it and showing up and going and touring and talking to property managers and contractors and inspectors and all the things, right?
Got you. Got you. So, um, we have 6 minutes, and I gotta have you come back.
I
You
would be
gotta
glad.
come back because I only had 30 minutes with you. But
My apologies.
um, I I want to ask this question. I ask all the investors that come on here that underwrites, and for new investors, I want y'all to pay attention to this question here. So let me ask this question, and it's in reference to metrics. Let's say there was no such thing as an IRR. There was no such thing as an equity multiple. There was no such thing as an average cash on cash. But what you did know, you knew the income, you knew the expense, you knew your debt service, you knew your cash flow. How much of the cash flow would you, what, I gotta word this right because it's going to come up messed up. No IRR, no equity multiple, no average cash on cash, but you have your income, expense, NOI, and you
Yep.
have your debt service. How much of a cash flow must you see? And you could say whether on a per unit basis or total, how much of a cash flow must you see to say, let's run with this deal?
Hmm. That's a really good question. And I'd say it really depends on the deal. It's got to be deal by deal basis, right?
Okay.
Like the Montana deal. The rents were so far below
Yeah.
market
Yeah.
that we were walking into negative cash flow day one, right? We knew that because of where we knew we could push it, right? Um, where right now, like I'm really focused on properties that have day one property level cash flow. I'm actually under
Okay.
contract on a deal in Rexburg that we're walking into, and I think this is what can answer your question.
Yeah.
Uh, I'm looking for deals where we can, yeah, have that property, that day one property level cash flow. On that deal, we're going to have 10,000 month one walking into it because of the structure of the deal that we got.
How many
Um,
units is that?
80.
80 units? Wow.
Yeah.
10,000 per month?
Yes, sir. Yeah. So
So that's 125 per unit.
yeah. And
That's
I feel
good.
like that's pretty good.
That's pretty
When I
good.
was in residential or doing smaller multifamily, it was usually 100, $200 a unit a month that we try to hit, right? I think it's more challenging a little bit as you get into bigger units. The reason we were able to get this, and I'm a firm believer in this saying, is that you don't find deals, you create deals, right?
Correct.
And we were able to structure a
Correct.
deal with the seller, and we're doing a full seller finance deal on it.
Wow.
Full
That
seller
is
finance,
good.
and it's great for this market because it's a little still at the moment, but it's
Yeah.
it's poised for a lot of growth, right? And I live 20 minutes from the property. I grew up here, so we know it like the back of our hands, right? Um, if your cash flow is strong day one and you got nothing but going up in the market, then you're in great shape, right?
Got you.
And so that's what we're really focused on. And we were able to get it's like 20% down, four and a half
Hmm.
percent interest only for 5 years, you know. So like this
Right.
whole deal is like beating the market as far as
Wow.
like what you could go get debt for. And
Right.
uh, there's a lot of things on this deal. I don't know how much you want me to get into, but I would say, like a couple of the deals like we've even done passively.
Yeah.
people have had to raise extra capital to do
Hmm.
distributions, which I
Right.
mean, that works for your strategy. For me, I really like the deals that have cash flow day one and that are just strong cash flow deals going forward.
All right. Listen, I want to. I know it's 11:59 and the holidays is. Boy, I'm gonna tell you the truth. I didn't realize that holiday was Thursday. I did not realize it. It snuck up on me, everyone. But I got my roast done. I do the roast every year. But let me just do this one question. John, go ahead, John, and answer ask your question.
I love what Joe said about creating the deal, not finding deal. So on the
Yes.
owner financing deal, did your initial offer include owner financing?
Yeah, every pretty much for the last year, I've been doing both cash offer and seller finance. Because with the state of the market we're in, high interest rates, previously it was with the election. I can usually be more aggressive with my pricing in terms, if they will accept seller financing.
Gotcha. All right, cool.
Um,
Gotcha.
Thank you so much.
the benefit on this deal was that we're very close to the seller. My dad, who is my partner on this, has been the maintenance supervisor for the last 12 years on this property. And so we had a personal relationship with the seller, and he was willing to throw us a bone. But the other, what's crazy is the 60 unit that I was talking about, Darryl, where we should have toured it. We
Yeah.
offered the exact same seller finance terms. We're about 800K higher than the cash offers. Offered 20%
Gotcha.
down, 4.5%, and they were about to take it till we went and toured it. And so I said, your units
Yeah.
are really small, and you have no closets, legitimate closets in your units, and we're gonna have to be quite a bit lower. And so they're like, well, let us look at the cash offers, and we'll come back to you. But they were ready to take it, right? It was
Right.
us pulled away, and I think
Yeah.
that seller finance is really going to become more prevalent because you can solve so many problems with it that a
Gotcha.
seller may have, right?
I want to get. I'm gonna get with you on that separately. Um, Seller finance. I want to talk to you a little bit more separate, but I would like to bring you back
Yeah,
um, so that we could continue this conversation. Because I like everything that you're saying, and I think it's very beneficial to a new investor. No, it's very beneficial to all investors. I don't care if it's new or if you're new or seasoned. I don't care. This information that you're telling us, that you are informing us on, I think is fantastic. So I want to first, Joe, thank you. So thank you for coming and
thank you.
being a part of the Commercial Multifamily Underwriting Show. I want to have you back. So I'm going to email you to get a date, another date and time, so
Cool.
to have you back, so we could continue talking about commercial multifamily uh, underwriting. If anyone wanted to get in contact with you, how could they go about doing it?
Yes, sir. So my email is joe@upcfund.com.
Okay.
And then you can find me on LinkedIn, Instagram. Those are the more active. Instagram, I'm probably more active on. You're welcome to shoot me an email. Um, yeah,
All right. So you said Joe at upcfund.com.
yeah, and I will put it. I'll put it in the chat for everybody. And
All right. Because you also help people raise money too, right?
yeah, yep,
Okay.
yeah, we do a bit of that as well. When I don't have an active deal that
Yeah.
I'm raising for my own deals, we'll do passive deals as well.
Cool. All right. So, all right. So listen, everyone. Um, let's all thank Joe for coming. I'm going to bring him back so we could dig deeper into this because to me, underwriting is very important. You don't have to. I don't expect for you to go deep into the wormhole and try to learn every single thing about underwriting, but I do believe that you should be able to know the basic foundation of underwriting, where you can demonstrate that to your investors when you're going to them and asking them for money. If
Absolutely.
you cannot demonstrate that you know that underwrite and you asking me or Joe or Marcus or I mean John for 50,000, 100,000, and you can't explain the underwrite, I don't think we're going to give you no money. Well, I'm not giving you no money. so, so anyway,
Right.
listen, the holiday is here. This week here is the holiday. I know some of you got to go do shopping and make them cakes and pies and get that turkey and the roast, all, get it all prepared. But I want to say to everyone, happy holidays to you all. Enjoy your holiday. Be safe out there. And for those that are experiencing the weather, um, be safe out there on the roads. Joe, you're where right now?
I'm in southeastern Idaho.
And I heard you getting a lot of snow out there, right?
I mean, we got a little storm, but not much, not much.
Okay. Well, you still
Not
be
yet.
careful out there because I heard the snow. From my understanding, I heard snow is coming on, especially around and I guess the Utah area. They must be getting a lot of snow, Colorado and all of that. But
Washington
listen,
and Montana are getting hit pretty hard right now.
oh, there it is, Washington, Montana. So, but listen, everyone, take it easy. I will see everyone back here in 2 weeks, which will be the 10th of December. And Joe, I will reach out to you to have you back here. All right.
Yes, sir.
Thank you all for coming out.
Thank
See
you,
you
Darryl.
all in 2 weeks. All right. Take it easy, everyone.